The electric air taxi market is on the verge of liftoff, with analysts projecting it could exceed $1 trillion in global value by 2040. Within this emerging sector lies ACHR Aviation, who's positioned itself as a clear leader, achieving several early milestones, including FAA certification progress, strategic partnerships with major players like United Airlines, and a strong balance sheet to fund commercialization. ACHR currently trades at $10.20 per share, with a total market cap of approximately $6.6 billion. Year to date, the stock is up only 6.58%, but over the past year, it has risen 183%. Let's dive into the financials to see what's going on. Starting with the income statement, ACHR is a pre-revenue company, meaning it has yet to generate sales or profits. You might wonder, why would anyone invest in such a company? The answer lies in its solid backlog of orders, which are ready to be filled as production ramps up and final certifications are obtained. In Q2, ACHR reported a net loss of $206 million, more than double Q1's $93.4 million. However, from an EBITDA perspective, the loss was $118.7 million versus $109 million in Q1. This suggests the increased loss is largely due to modest rises in R&D and general and admin expenses, making it less concerning than the headline figure implies. Looking at the balance sheet, cash increased nearly $700 million, driven by the issuance of approximately 92 million additional shares since Q1. ACHR's strategy favors raising funds through equity rather than debt, resulting in relatively low liabilities. While this reduces financial risk for the company, it does dilute existing shareholders' value, which can pressure the stock price. Now, let's highlight key achievements from Q2 and their potential impact on future performance. ACHR is producing 6 Midnight aircraft, with 3 in final assembly. This demonstrates scalability and operational readiness, critical for meeting demand and satisfying FAA requirements. Progress towards a production certificate also reduces regulatory uncertainty, a key overhang for eVTOL stocks. They'll also be the official air taxi provider for the LA 2028 Olympics. This designation boosts brand visibility and validates ACHR's leadership in the US market. In addition, the June 2025 executive order supported by the DOT, FAA, and the White House creates a viable path for US launch as early as next year, potentially accelerating revenue growth. In addition, delivering the first Midnight aircraft to the UAE and commencing flight testing diversifies ACHR's revenue pipeline and signals early international adoption. Partnerships in Abu Dhabi combined with expected commercial payments could help reduce cash burn and extend runway. And lastly, interest from 4 allied programs accelerated by strategic acquisitions provides a high margin and less cyclical revenue stream. Defense contracts can offer long-term stability and support commercial operations, mitigating some risks of the nascent civilian market. Each of these milestones either accelerates time to revenue, reduces execution risk, or strengthens ACHR's competitive moat, factors that can justify a higher multiple and support stock appreciation as the company nears profitability. Now moving on to valuation. Since ACHR has no revenue or profit, traditional valuation metrics like price to earnings or price to sales ratios aren't applicable. Instead, we rely on analysts' expectations and potential catalysts. The current average price target is $12.39 per share, implying about a 21% upside. This is supported by mostly buy and strong buy analyst ratings. Key drivers include ACHR's role as the exclusive air taxi provider for the 2028 Olympics. In addition, projected profitability by 2028, with analysts forecasting roughly $1.1 billion in revenue. The options chain also shows significant bullish interest at a $20 strike price, indicating potential for a breakout above the $10 level and meaningful technical upside. Now, the eVTOL industry has vast potential, and ACHR is well positioned to capitalize on it. Stock appreciation is likely to follow as commercialization progresses. For those looking to invest, at their own discretion of course, waiting for the stock to trade around the $9 to $10 range could be a perfect entry point, as recent earnings have caused some volatility. Now, if you enjoyed this analysis, drop a thumbs up and subscribe to the channel. Share your thoughts on the stock below, and as always, thanks for watching and I'll see you in the next one.